Hello, hello, hello. I am back. How is everyone doing today? Sorry again for no live stream. Yesterday was off training. Actually, I didn't get to bed till after midnight. Training ran late. So, long weekend. Little running behind. I do see I have a lot of emails to get through. I do see emails from some of you. We might have a talk just about some of the stuff this afternoon. So do make sure you tune in, especially if you want some thoughts on fundamental versus technical investing and trading in this market. But we have to catch up a little. I am still behind. I could only get through, I had like 400 emails and I'm still not caught up. Still not caught up from this weekend. When I do something else, it just, oh, wow. All right. Not your problem. My problem. So, how is it going? We're going to have to switch away from the economic calendar we're using. I am going to switch to something else, probably this. But the problem is, can you see this? See, this gets so small. This is the one I like to use, but for anyways, I use this one because it's so easy to read. I'm still doing a little more research, but we're gonna have to switch away from this one. Just for the point of completeness, today we have the housing market index, very minor, and then nothing. Oh boy, let's just catch up with some things because tomorrow, building permits, housing starts, red book minor. Wednesday, besides some mortgage stuff, which is minor, we have consumer confidence for December, which can be important. We have the crude numbers, of course. But then Thursday, final GDP. Final GDP still forecast at an expansion. Not expecting many fireworks from that unless it's way off. Way off. Continuing jobless claims. The core PCE prices quarter over quarter final number, which is rear looking, but that's going to be an important subcomponent of that. So we have some jobless claims, initial and continuing, and then the GDP number, but I think more important is going to be some of the core PCE prices behind it. On Thursday, we have the Consumer Board leading index, which do not ignore on Thursday in forecast to still be in contraction. There's a reason that is a leading index. We have the KC Fed on Thursday, and then Friday, and stuff will be winding down, but Friday's a very busy day. Friday is very busy. We got the core PCE price index, durable goods, personal income, personal spending. Then we got Michigan consumer sentiment, the final numbers for December, and that wraps it up. So remember the holidays, and I'll go over any trading closures and everything else towards the end of the week. But December 6th is the observance of Christmas. So we have that on the Monday because Christmas falls on a Sunday. Market map this morning, pretty mixed. Tesla is up a bit. BABA is up. And oil and related things are up. You can see that consumer cyclical and energy is so far the strongest this morning. But everything running a bit positive after a bloody week last week. For Feb 1st, funds rate is still at 70% for the 25 basis point. Fear and greed still slightly in the greed. We'll go after current market at some other point. I'll get to say hi in a second. By the way, we have the major OpEx, one of the biggest of all times, definitely the biggest for this year. Now that's gone. Now remember, about 40% of the volume right now is short-term options trading. So this can shift more so than normal, but right now the positioning is still negative gamma. The gamma flip is about 39.63. So any rally keeps it in negative gamma until you're closing in on that 39.60 area. There are a couple put gamma walls on the way up, 3900, 3950, and 4K. 4K is still the big one. In earnings this week, there's very little going on today. Tomorrow before the open, I am paying attention to General Mills. We got Nike and FedEx after the close. BlackBerry, poor little BlackBerry, which used to be so important, and now it's like a. But the FedEx is going to be very important, especially on guidance. Wednesday, not much in the morning, but Micron after the close. And with used cars collapsing, it's going to be interesting to see what CarMax has to say, but then it's winding down going into the full-blown holiday season. So let's see who is here. Good morning, Patrick. First in is most of the time. Good morning, Martinez. Fine morning, Stafford. Hope you are well. Happy Monday, Josh. Santa Claus coal rally income. What's a coal rally? You know? Well, I'm going to be watching for the Santa Claus rally, especially once daily and weekly cycles are at the bottom. We'll get to that. Do not potentially discount that for short-term swing trades. Good morning, Jacob. Good morning, CD. Good day, actually, CD. Good morning's Options 22. Good morning, Sterling. I am back, Christoph. Happy to have you here. Good morning, Dave. I need an assistant. Yeah, my dogs they're not good assistants. They don't answer emails very well. Yeah, see, you can't see anything on that calendar. I need to figure out something. Thanks for that feedback, George. Afternoon all for Charles. Good morning, Sashi. It's wonderful to have people from all over. The weather forecasts a record cold winter. White Christmas may get an unexpected Christmas rally. Again, I'll give you my thoughts, but it's definitely turning colder. It was 11 degrees, 2 degrees with the wind chill this morning. I don't like walking 5 dogs in that temperature. I got to take them out in groups. It's just no fun when it gets this cold. Hey, Chris. Good morning, Anissa. Good morning, Paul. Good morning, Royal Palms. Well, everybody here, look at this. Do you allow us to post potential call-outs in here? You can you can do anything you want as long as you're not trolling people or being obnoxious. And you know what? If you're watching for a play or something, you can always put it in here to help other people. Just don't, it's anything that anybody puts in the chat is not trade recommendations. It's something that people can research. That's the point of this, also to help people learn. And if you're spotting something or something's on your personal radar, feel free to put it in here. Don't just pump and dump. I know we have people coming in here trying to pump like penny stocks or low float stocks and everything else. That's not what I'm interested in. I want legitimate stuff in here, not just, hey, come. I mean, you saw what's going on with the social media influencers with finally the SEC after the horses are out of the barn. The cows have wandered away, and now they're cracking down, and we're definitely not anywhere close to anything pumping and dumping, because if you've been a long-term member here or even just tuning in, we don't do that here. I've warned about that for years. We do proper analysis here to help people learn and trade, and I know I've got a number of very nice emails and very nice people reach out in all different ways telling me how they've learned, how this helped their portfolio this year, how it saved them from giving back a lot of gains, which is the point. That is the point of this channel. Educational, literally educational to the point of, hey, let's learn, let's grow, let's do proper analysis, let's take into consider probabilities. There's no guarantees. So, what am I watching for? Let me just do a macro, and I'm going to use the S&P. You see the daily cycles getting closer to the bottom. Not bottoming yet, but closer. Weekly getting closer to the bottom. Remember, we had daily and weekly cycles at the top, and we finally got the sell-off move. Now we're getting to bottom and bottom. That's why I'm not going to ignore a potential Santa Claus rally, whether it triggers the end of this week, whether it triggers next week. And historically, the probabilities, no guarantees, the probabilities are for an upside bias, especially after Christmas, heading through the first week of January. So if there are bullish triggers, bullish signals, they can't be ignored. Does that mean, look, we buy and hold all next year? No. Again, I am still bearish. The systems say still bearish for next year. The longer term stuff. We've broke some pretty key technical levels on Friday and closed well below them. But we could easily bounce back into the overhead congestion if we do get a Santa Claus rally. But that's why we'll also need a trigger signal. It's not just, let's just buy and hope Santa shows up. Because I think this is what you mean, George. Santa could show up with a lump of coal, or it could be Krampus. We could have Krampus show up. He will be Krampusing our style then. So, I'm watching. If you can't tune in or you have other holiday things, watch for cycles to get to the bottom. Watch for potentially bullish setups. And those would be short-term, potentially trades. And that's not every day being up. Could have an upward bias, especially for the first week of January. Does that mean you just buy and walk away? No, you need stops. Because on the time it doesn't work, it's not good. Could we easily, if it breaks down, you know my key levels is 62.5. We're still a ways off because between the 50 and the 62.5, we could get a secondary bounce back up. But my key level, 37.60 roughly. And then I would not be surprised if we do break down to reconnect with the 200. However, we're not there yet. We still have key support. Our next major level support, 38.35. That's the secondary. Little after our initial highs in October to pull back beginning of November. Secondary reaction point into CPI Thursday. So this is still key, and that's right at the 50% harmonic pullback area. So this is very, now that we broke that 39.11 area, this is key support. We break down there. We have this little bottoming area right before CPI Thursday, which is the 62.5. You get the close below there. I am, first off, before even targeting the 87.5, I'm targeting the 75 in this instance. Why? Because it is the 200. The 200 was major support. That doesn't mean we can't dip below it, but I'll be watching that key area going in. On a rally side, and I'm covering the more macro, it's a quieter news day today, and we didn't get to do a macro analysis yesterday. Going into today, I am keeping an eye. My minor level right now is about 38.95. That's the 4-hour rotation zone. It's also the 12.5% harmonic. On a break above there, I'm targeting that 39.10, 39.11. So we talked about multiple times. And then the top of the rotation zone, this little swing up move from the 15th of December, the 25% harmonic and the declining 4-hour rotation zone, 39.30 area. Does that change it into a bullish bias yet? No, nowhere clear. I will be watching if we come back down for a potential bottoming signal from Friday's lows. A potential bottoming signal. We're trading right at a key level right now, 38.80. And I bet you everybody will know who's longer term what I'm going to do in here. If we break down, I'm focusing on 38.65, 38.65.75 or lower to potentially make a bottoming formation. If we do break down below there, not even necessary for today, this is a great area for the shorter term that I will use the little reverse harmonics. Minor would be 38.49, major cluster right in front of that 50. Now we have a major cluster, 38.45, and then 38.41 area. Other than that, I'm using the harmonics on retracements. We break above this 38.95, then I'm using those 4-hour rotation zone targets. Hope that is clear for everybody. We might not get to it this morning. Remind me this afternoon to look at, if you want to look at Spotify. I'll go over to SPY in a second. That's cold in North Carolina. Wow, 48, 46 in Houston. That's getting chilly. CD, we might have to do it this afternoon. Remind me, I'm running, which I want to get through some of this macro analysis. You're looking at Spotify 63 put for December 30th. Buying or selling? Remember, because you can buy, I mean, I love doing cash secured puts. So you have to clarify whether you're looking to buy or sell. NASDAQ, real quick, the overhead resistance area is roughly 11,450 to 11,500. That's just the way it works out. We break down below Friday's lows. My target area is a 62.5, about 11,170, 180, 11,180 to 11,193. The close below 1180 on a daily basis shifts me into much more bearish on the NASDAQ. I'm watching, again, the 4-hour rotation zone. We have a resistance shelf, so above about 11,420. Then I'm targeting these upper areas, especially more so towards this 11,500 to 11,520. Let me get to the spiders and the Qs. Boy, it makes it a little more difficult when you don't do a Sunday live stream. So remember, the spiders hit the first target of the double. Your next targets on the breakdown play are still 377.87, 373.28. We do have a gap left behind, trading roughly flat from Friday's close. So this one I will be keeping more of an eye on the 1-hour rotation zone, because we start getting above Friday's high, 385 area, 385.25 area. I will then use about 387 as a first target, the prior harmonic area. Then 388.40 coming in with the top of the 1-hour rotation zone and this breakdown zone. And that's well before the gap fill. Then you have the gap fill, 389.65. So those are my key bullish targets to the upside. Remember, we triggered a high probability pattern here that still favors more contraction. We do have a gap left behind, and we've done technical damage in the spiders. So this 390 area is pretty key, because you can have the rolling over 50 and the declining daily rotation zone. I should say 390 to about 393 is key resistance right now. And you are back below all the significant moving averages we follow, especially that 50 that was broken on Thursday. So the only targets on a rollover play besides Friday low as a very short-term target that I'm using is 377 and 373. The Qs, which we don't have a great pausing bar right yet. So Friday's lows, 272.61 to 272.23. And then my major target, if we can shift this to forward harmonics, but we don't have a great pausing bar yet. But we can see if it lines up with anywhere else, why we still have technically a pausing bar on the 4-hour. It's not as strong as a pausing bar on the daily, but we can use a pausing bar on the 4-hour. So minor would be 269.58. My key level will be focused on the gap down open from the 9th before CPI Thursday. That's 9th of November. 267.76. Minor 266.54. I will be updating these levels once we get a daily pausing bar. And then major significance would be down at this key closing, the full gap fill from Wednesday the 9th, which is back to 263.32. All right. We pull off some of this other stuff. We'll put back on those targets if we need them to the upside. They're technically not invalidated just yet after hitting that first target area. But on the closing basis, it's 270.24. Watch for that. Why? That makes it a lot easier. You get a close below 270.24. I really start focusing on the gap fill from the 9th. All right. Dow pausing right at the 50 and the harmonic. We might get a, this is not technically a daily pausing bar yet unless we hold Friday's low. But my target to the downside is 32,415 on a break of Friday's low. My overhead target is 33,580. Russell, come on. Russell. My support still 1763, resistance 1788. We'll have to look at the Russell a little more closely later. The DAX is still an inside bar, but my key support is 13,880 area. 13,890. We start breaking below there. I'm focusing on the return to the 200. That could be a good potential trade. If this 50 holds and we do get the breakout play above Friday, it's a tight reward to risk, but it's about 14,190 at this point. Notes, I'm paying very close attention to the bottom of the rotation zone and this low area. Between 113.28 to 113.23. There is not a great trade setup in the notes, so I am being very patient in that area. Dollar index. We still cycles going up to the top, but this 104.50 area is key on a short-term pop. We start getting above there. I am focusing on 105 to 105.10 on a quick little run up then the area, this little area about 105.60, 105.60, 105.62 with the 200. Those are my minor upside targets. Remember, we now have cycles rolling back up, but so far you can see a sideways correction, and that other 105.60 area is key. Remember, we also get a dollar rally. We could get some more downward pressure on the financial futures. VIX, letting today settle out, but I will be watching Friday's high and low. Crude, getting that bounce, and the oil and energy stocks. Right now, my key resistance, there's not a great setup just yet, but key resistance coming in about 77.30. If we do get above Wednesday's high, Thursday high area, we'll watch for a breakout play to the 50. Short term. Key support 72.96 on a closing basis. Bitcoin's gone flat again. Now it's still all weekend below the prior support levels, 16,800, 16,830. What we're looking at. Euro, I'm watching the top of the rotation zone because we start breaking down below these two lows. Watching for a quick potential trip down to about 104.80. Pound, virtually the same thing with the bottom of the rotation zone at 200. 121, we get below 121. I'm watching for a reconnection with the 50, 109. Nothing yet to the bullish side unless we get a close back above about 122.40. Tesla, I know we're going to open in a minute, so we'll have to get to other things this afternoon. Slight gap up, but key resistance level 163.25 with the daily to about 167. We'll be watching for a potentially rollover play. The only thing you have is it's very oversold with cycles at the bottom. So it's going to need some kind of bounce or slight sideways movement to get out of this oversold condition. The key support area on the harmonic in the short term is still 147.75 to 148. Let's see what else we have. Incredibly low yeah. all right, we're open now. There's your little gap on Tesla. Let's just take a look. Hey, Gary, we can cover more stuff this afternoon. Sorry I couldn't get to things. We could cover Spotify. We can look at some of the other currency pairs and address some other questions. Let's just see. So far, it's a quiet day today. So far, in terms of, and the volume is low. Look at this opening. Very neutral tick opening. Very neutral. So just don't, all right, we got a little bounce, but don't get yourself in trouble here until we get some clearer plays. That's my advice. And if it does go, try to test Friday's lows and even breaks it above it. Watch for this major clustering area just in front of that 50% harmonic. Why don't we take a closer look at NVIDIA this afternoon? So bring your stocks you want to look at this afternoon. Thank you for tuning in. I shall talk to everyone later. Bye.